twice, right? So whether you want to use this one, or call it a double break, which is what I would call it, 15 minute equals bullish, MSB plus, I'll just say it times 2. Right. So it's broken that market structure from here, and it broke the next structure level up. So it was going lower highs, lower lows, lower highs, lower lows. It has broken the first one, which is what matters most, but it has also broken the second one. Right. So the 15-minute chart is bullish. The 1-hour chart is in a downtrend. The 4-hour chart's in a downtrend. The daily chart is at risk of breaking. So that would be breaking bearish, I should say. Breaking bearish. And if you want to just, I don't write this, but just so you know, check daily close. Yeah. The weekly is bullish and the monthly is bullish. So then for that day, you have your conclusion. For me, consolidation. Reason why it's consolidation, and I should say like higher time frame. Higher time frame, consolidation. Reason for that is you've got bullish monthly, great. We've been 8 months consolidating above the market structure level, excellent. You've got weekly, bullish primary, bullish internal, excellent. You've got the daily potentially breaking. So the weekly uptrend is not going to continue on a one-day basis. The monthly uptrend is not going to break out in a single day. So if your daily is at risk of breaking bearish, that means the weekly and the monthly can remain bullish, but they're probably not going to do anything immediately until the daily does, right? You cannot have another weekly BOS. So we can't have the next weekly breakout until the daily's bullish. It's literally not possible. Because for the weekly candle to go higher, so too must the daily. And the daily will do it first, because you have 7 days in every week. So you have to have 7 daily candles that on balance are positive in order to create that structure. And so I would call this high time frame consolidation. And if you want to then have a intraday, right? Intraday, if M15 holds, expect H1 and 4 MSB retest. Right, so do you understand this? Intraday, if I was not on a Saturday, but if I was looking to trade Solana, I would say we've had a positive structure break. So we've had a market structure break here on the 15 minutes. So we've had the early sign of a possible reversal. Okay. If this holds, meaning it doesn't make a new low. So if the market holds and stays here, what's it going to do next? The next thing it's going to try and do is break its next time frame up, structure back to bullish. So it's going to go towards the daily and the the 1 hour and the 4 hour market structure level. Because before it can go from a 15-minute trend into a 1 hour trend, it has to try and break the 1 hour trend bullish. There's no point for the market to break 15-minute structure bullish if it's not then going to either be a fake out, make a new low, or go and attack the next time frame up, the 1 hour. And it's not going to have a weekly breakout until the daily gets bullish again. And it's not going to have a monthly breakout until the weekly makes new highs. So all the time frames build upon each other. And so when you start to see low time frame reversals, understand that they are going to try and get to the next time frame up in whichever ones you're using. They won't always succeed in doing that because, of course, you do have a bearish 4 hour and a bearish 1 hour chart. So what you also should be watching for is a 15-minute market structure break anywhere in here. Okay? So if this stays bullish, if we stay above the red line, I'm going to get rid of this one. If price stays above this red line, it's going to go to this purple line. That's your assumption. The invalidation of that would be the current time frame, 15-minute, which is currently bullish, showing a sign of not being bullish. That could come here, right? That might be right now. That's a sign we're going to new lows. Because remember, the 4 hours bearish, the 1 hour is bearish. It might be from here because it doesn't quite make it. There's a lot of resistance. It doesn't quite make it. It makes a lower high. If that happens, over here is where you say, okay, the 15-minute tried its best, but it's failing. We're still bearish 4 hours, still bearish 1 hour, equals continuation. That's where you'd look to short because you got 4 hour, 1 hour, and 15-minute all bearish. Understand this. You should not even think about considering to fucking even maybe possibly short Solana here. No sense at all. It makes no sense to short Solana right now because the 15 minute is bullish. So, if the 15 minutes bullish, even if the 1 hour or 4 hour are bearish, you should wait for the 15 minute to show bearish signs. Then you've got all the time frames in your favor again. You've got the 4 hour, 1 hour, and 15 minute all on your side. And we're talking here like intraday, not talking about higher time frame because the weekly and the daily are bullish. But always good context to remember, if the monthly and the weekly are bullish, how much should you be expecting Solana to go down? Should you be targeting new weekly lows because there's a 4 hour downtrend? No. Monthly, weekly, your primary high time frames, they are bullish. So what you're trading is within the structure of above, right? So let's lay out a hypothetical trade here. Let's imagine Solana comes up to the daily open, which is 166. It tries to get above it. It comes back below and it breaks structure here. So at this point right here, when Solana's at 165 and it's gone like exactly like this, it's tried to go higher and then it's reversed. You then have a 4 hour downtrend, you have a 1 hour downtrend, you have a 15 minute downtrend. You absolutely would be completely fine and completely valid to enter a short, let's say here with a stop loss at the high. But where should you target? If the daily is breaking bearish and the daily structure breaks, you don't need to worry about daily structure. Right? So let's say this happens in line with this. Let's say this happens overnight and the structure does break. So this orange line is the daily structure. So let's imagine that on the daily close, we're actually bearish. So I'm going to just tweak this so that on the daily close, which is over here, we're bearish, right? I'm just going to drag this down a bit. There we go. Okay. And you'll be looking at that. So you understand from the higher time frame, right? When I zoomed out, you understand that the orange line represents the daily market structure. If Solana does this and then breaks structure here, and you get a trigger to enter on this second BOS after the right shoulder, you can use whatever entry point you want, but that's what I'm saying. You then have 15 minute bearish, you have 1 hour bearish, you have 4 hour bearish, and you have the daily with a break of structure, a market structure break. Okay? Completely valid, enter a short. But where should you target? Should you be targeting fucking 120? No. Go to your next bullish primary level, the weekly, and that's the absolute maximum you could ever even consider shorting it into, which would be all the way down here, which is this red one. Let me just double check it's the red one. I'm sure it is. Yes, the weekly internal structure. So let's get back in, 15 minute. So you'll be looking at this and saying that the absolute maximum you could expect for this to go to would be 146. Now, remember, it's a bullish market. So it's probably going to make a higher low on the weekly. It's probably not going to go all the way to there. So what you should be doing is not targeting 146 and saying it has to go there. It's like people saying Bitcoin, 12K next, there's a gap it has to fill. No, it fucking doesn't. What you would say is if you're correct on this trade, that your target would be towards 146. So let's just say 150. That's just made up. It doesn't matter. You'll see why. Let's say this trade works out. You enter a short and it breaks down. As soon as it makes a new low, you are then looking for a market structure break on your time frame. On the time frame which you entered, 15 minute. So if it goes to 150 or 147 without having a 15 minute MSB, if you're lucky enough to get one of these big trends here where it doesn't actually manage to break any. In fact, yeah, I fucking squiggled it wrong. I did draw one. Right, it breaks down like this, and it breaks down and breaks down and down and down. Excellent. Well, the 15-minute structure never broke. Stay in. But if it trends down more like this, probably like what you expect it to, where it comes down into a level, breaks back up, then you're out. You're out when the 15-minute starts to reverse. Because remember, your weekly is bullish. So anywhere here, you're expecting it to hold. The weekly's bullish. You're expecting it to hold. The monthly's bullish. You're expecting it to hold. So if you're lucky enough to be in a short and it actually goes down, get out as soon as the same time frame you got in on flips the other way. That will keep you on the right side of the trend, even if it's counter trend. So even if you're counter trend to a monthly downtrend, if you're counter trend to a monthly uptrend or a weekly uptrend, that's completely fine. There's nothing wrong with shorting in a bull market or longing in a bear market. You have to scale your time frames. You have to be aware of them top down so that you don't get caught with random targets of like a really easy thing to say here on Solana would be, oh, if I short from here, 120 is support. Fuck no, 120 is not support. If you're entering on a 15-minute, 120 is not your level. Because internally, you've got a weekly uptrend. How can you be targeting 120 when there is a weekly internal structure level at 146? You can't be targeting 120. So, you should be targeting maximum 146 if you're lucky enough to get it, and more likely, whenever the 15-minute shows signs of reversal, the same reason you got in, reason you get out. And you can have other reversal reasons, but we're sticking with market structure here. So that's how you analyze top down. That's how you create a conclusion, and that's how you scale them. So you stay on the right side. This also will help you because in a bull market, buying the dip is the way to make money. But people buy dips with no thought at all for market structure. You can't just buy a dip in a bull market because how many times do you need to see it to understand? Right, so let's get rid of this. Let's get rid of all this. Because you've done your top-down analysis, you're not buying Solana here. In fact, I was talking in Position Trader chat yesterday. I want to buy Solana. I want to open a Solana swing long or position trade long. But it's not time. Because we have a 4-hour downtrend, we have a 1-hour downtrend, and we actually potentially now even have a daily downtrend. So we'll have to wait. We have to wait and see. Because Solana, let's just go to the 1 hour, right? We're in a 1-hour downtrend. So buy the dip. How many people do you think bought that dip? And then bought this dip? And then bought this dip and are fucking buying this dip? Oh, it's above support. It's above support, but it's in a downtrend. If this support holds and you get the 4-hour and 1 hour, right? If this support, which is fucking valid, that's a low. If that low doesn't break, if it forms an FTR, breaks back above here, and then goes like that, boom. Well, now you've got a 4-hour uptrend, you've got a 1-hour uptrend, you've got a 15-minute uptrend. Depending on how this closes today, you might even have protected the daily structure, and it's held support. That's a dip to buy. This is not a dip to buy. This is not a dip to buy. No, that's dips to buy. And when you zoom out, you keep yourself on side. When you zoom out to a weekly, you can see this even more clearly. Remember, as soon as you get a bullish structure shift, such as this internal structure, right? Weekly, low, into a weekly high. People are like so zoomed in that when we close at 177, they want to just buy any dip. And they're buying at 174, and they're buying at 170, and they're buying at 165, and they're buying now. But if you're aware of your market structure, you should know that since this is the internal weekly structure, the dip could be anywhere below 176 and above 146. So it could be anywhere in that range. So are you going to just buy at 170, 165, 160, 155, 150, 145, or 146? No, you can't buy them all. So you have to create a process for when do I buy the dip? You buy the dip after you've seen a pullback and you have your time frames. So let's get to the 1 hour, right? So after you've had the pullback, so you set your weekly level, weekly structure is bullish internally. Wait for it to go into a downtrend. So wait for it to develop a 4-hour and 1 hour downtrend, because it will. Pullbacks happen. Markets can't go up only. And then wait for that downtrend to reverse, and wait for as many of these being on your side as possible. So the daily currently breaking bearish, that's the biggest red flag for Solana at the moment, which is why it's just high time frame consolidation. Once you get daily structure back in line, and you have 4-hour, 1 hour, 15-minute back in line, that's your time to buy the dip. And even then, it doesn't mean that it's going to work every single time. You know this, right? Because if you're looking at the 1 hour, or let's go to the 4 hour. So from when the 4 hour flipped, did it have any yet? It didn't. So there's absolutely no reason to buy on the 4 hour. Lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, and no market structure breaks, right? The 1 hour probably has had some. If you're looking at it here, you're looking at down, nothing, nothing, nothing. This one was down there, right? At that point, you technically did have a close above, right? But higher time frame context. Look at your higher time frame context. Your 1 hour may have been shifting here, but the 4 hour wasn't. The 4 hour was in a downtrend still. So if you're trying to buy the dip based on a monthly bullish, weekly bullish, weekly bullish, daily bullish, are you going to use a 1 hour reversal that still has a bearish 4 hour as a reason to buy? No. At least you shouldn't. But you can test it. Test many different ways. So, top-down structure. Respect the structure. Top-down structure here. Which one is it doing here? Let me see. Yeah, okay. Perfect. Just want to make sure I'm on the right one. Second, trade setups. So I already kind of covered this a little bit with the Solana one. But there's two different trade setups. Buy the dip, so BTFD. That's the buy the dip one I just mentioned. You can do this with many different rules. You can choose whatever you want. Just remember, to build a system, you have to have objective rules. You have to pick something and stick with it and test different entry criteria. But the thing you must do is establish a primary trend and enter on a secondary trend. Now, actually, I should caveat this. My advice here is not that you should have 6 time frames for your trade entry. The top-down analysis of structure is for you to do like in the morning and do it each day so you can see where the market is at. But if you're looking to buy a dip, you have to understand what type of dip you're trying to buy, or if you're trying to sell or short. If you actually want to buy or sell Solana, you have to first say, what matters most to me? Is this supposed to be a position trade like the one I'm trying to set up? So a position trade for Solana, I want to hold it for several months. Therefore, I'm not going to put as much emphasis on the 4 hour, 1 hour, and 15 minute. I might use them for execution later on, but it won't be until there's a daily retest of market structure or a weekly retest of market structure with a reversal on a high time frame, right? So you do not have to use 6 things to enter the trade. This is your high time frame analysis, top down. And it also frames your lower time frame setups. So for example, like the example I showed with the 15-minute short, because you've done your top down analysis, it reminds you that you can't target fucking 0 on the short if you do take one, because you've got weekly bullish, monthly bullish, right? So, and like I said, oh shit, there we go. And you also can't ape in to a short here because the daily is breaking bearish. So you have to wait for this daily close because you very well may get another confirmation for short-term downside. But that's 6 hours away. So you have to wait. That's why top-down analysis is so important. It will remind you. If we've just printed a strong weekly close, it's not the time to buy. Right? If we've just had a massive weekly candle, like you'd see on Bitcoin, where's the Bitcoin chart? Like here. Right? When we close any of these big weekly breakout candles, after that candle closes, and certainly like this one, so remember earlier in the week when Bitcoin's candle was all the way up here on like Monday or Tuesday and it looked amazing? Why would you be buying there? Why would you be buying the dip within it? Because if it pulls back, if it pumps Monday or Tuesday and it pulls back, then you're buying a dip on a 1 hour chart or a 4 hour chart and you're not zooming out and realizing this is putting in a reversal candle. It's putting in a trapped liquidity, potentially false breakout, although it didn't break out. Double top candle. It's getting weaker. All these dips you're buying intra-week are getting weaker. So it doesn't mean you can't buy the dip. It just means you buy it with a different time frame, right? You don't buy it targeting new highs. You maybe buy it targeting a lower high, or you buy it targeting a scaled entry or whatever. So when you see the big candles, like the big weekly candles here, your top-down analysis here, let's say on the September candle, either of these two, your weekly analysis would say wait for pullback if you're looking for a high time frame entry. Right? So if you're looking at Bitcoin, you're saying I want a position trade on Bitcoin because we had this structure break. Let's take this example over here. Whenever the internal weekly structure on Bitcoin broke out, and on the 24th or whatever it was, when the chart was like this, it's really tempting to say, I need to buy Bitcoin because it might not pull back and I want to hold it until next March anyway. And so therefore, I need to be in. Right? I want to hold it for 6 months because I think this setup leads to new all-time highs and I don't want to miss out. Okay. In one sense, that's fine. In another sense, it's not. If you do your top-down analysis, what you should say is weekly internal structure break. Good. Therefore, if I'm going to buy now, if I'm going to buy here, because it's a high time frame trade and that's my confirmation, then my stop must be below the weekly structure. It must be somewhere below that weekly close, maybe even the wick. And so then you have to scale it and say, okay, what's my risk reward on this? Where's my expectation of it going? Because if you're buying there, you're saying this structure holds, which means it can go all the way to there and go all the way to there and go to the moon. And that's still a valid trade. So if you are buying there on that close, you must have your invalidation below here. If you find from your testing that having your invalidation all the way at 52 with an entry at 65 does not give you expected value positive, because you would require Bitcoin to go to 80k just to make 2R, then you say, wait for a pullback. Any pullback, right, internally, any pullback above 54k on a daily chart is an opportunity to buy. Because you've had a weekly structure break, so your next time frame down, let's call it the daily, any pullback that then has a bullish structure break and stays above 54 is a reason to buy. So there's a pullback, you're looking for structure level to form, there's a structure level forming, it makes a new low, and then it breaks back above there. That will be your time. So now you've had your MSB. You had price come down, set a high, down below a low, back above. On this candle close, you can then say, okay, I have now got a structure level that has potentially formed a higher low on a daily within my bullish market structure on the weekly. The weekly has not been tested or touched. I could now enter this. I could put my stop loss there. And that is the same trade because that can be your weekly higher low. It's the same target. It's the same view. It's the same expectation. You've got a better entry because you waited for the pullback and you had the high time frame confirmation, the bullish shift, and you waited for it to go towards 54, understanding that it should not go to 54 if it's bullish. It should form a higher low. And you enter with a better stop at 60 or 58 or whatever instead of 54, and an entry at 63 instead of 66. And then if it was going to go to 80, you have a much more favorable risk reward. There's slightly higher risk. It could still stop you out. That's not impossible. But your testing will show whether that is higher or lower in terms of expected value. So test it. Test these different scale timeframes. And as you can see, obviously, that then, because the lower timeframes build into the higher timeframes, when you get back to where we are now, what did that daily reaccumulation lead to? That led to a further bullish internal shift on the weekly. So, what next? Popcat. Show an example here. Establish a primary trend, enter on a secondary trend. So I just showed it on Bitcoin using a weekly and a daily. The confirmation you're looking at is into a primary structure retest, like I showed on the Bitcoin chart. The primary structure retest means price goes towards the structure level below, but shows signs of reversal. Here's another way of doing it that's super objective and very, very, very easy. The objective rule. Your secondary confirmation, and let me just go back here, right, just so you can see it as it develops. The secondary confirmation must occur within the candle, and I spelled candle wrong, like a fucking G, W's in the chat, of the primary structure. Meaning, you draw around this candle. Why? That's your daily market structure. So we can see here the Popcat is in a nice uptrend. It pulled back This is the daily candle that had the low, on a close basis and went to new highs. That candle, also known as an order block, you can call it that, that candle forms the market structure level. The MS level is here with the candle close. The order block, the candle itself, you're looking for a secondary confirmation within that candle of primary structure. So until it hits that level, you cannot look for trades. So then you go to your secondary time frame, which is the 4 hour in this case, and you're looking for a secondary confirmation. So the way you would actually set this up is you would set an alert here. So when you do your analysis, Popcat, I like Popcat, want to buy Popcat, but I'm not interested in Popcat until it tests here. As soon as it hits that level, your alert fires and it says, look for 4 hour secondary, look for secondary time frame confirmation. And we play it forward. Sorry, I've actually go back to the daily here because I have this already mapped out on the 4 hour, right? So the daily, play it on. When it comes in here, you'll see that on the daily, it holds and goes to new highs, okay? But if you're looking just at the daily, where do you buy? You either blindly buy in here, which doesn't really have much in the way of risk management or confirmation, or you use your secondary time frame, i.e. the 4 hour chart, to go here. And this process is very simple. So this is the same chart as here. It's all drawn the same. So we're going to go in now to the 4 hour. Here's the exact process. This box, remember, this is the daily candle. The process is 1, it must retest the daily primary structure. That happens here. As soon as it hits this, you're looking out for that. 2 rules to entry on a trigger. Number 1, a 4 hour MSB. So it must be in a 4 hour downtrend going into that box. It is great. You're waiting for the MSB, which is here. The last high that led to the low breaks. So at this point, you get a market structure break. And then, there's 2 rules here, and then a higher low in the 4 hour order block. So that's an FTR, failure to return, which is this, a low, and then a higher low, FTR, whatever you want to call it, using the 4 hour order block. And so this is very simple. When you see this market structure break happen, you simply set your order at the very, very top of the preceding order block, the 4 hour order block, that led to this, so the last down close candle that led to this impulse move. And then you enter there, you go long on the retest, using an order block to make a retest objective. Why would you wait? Why not just buy in here? Why would you not buy the first touch? Well, you could, and you can try it, and you can test it. However, what you're looking for here is double confirmation, hence there's 2 rules, meaning daily market structure is bullish. Price should then hold it. I want to see price hold it. That's what this does when you have the 4 hour market structure break. The initial bullish reaction from the primary market structure indicates strength. And I've spelled strength wrong, like a fucking G. W's in the chat again. The initial bullish reaction shows strength. But what do people do on the first bounce? They FOMO in. If it's left behind an order block, that means it's left behind an inefficiency. Inefficiencies tend to get retested. So you can actually get a better entry by setting your order below. Also, again, if you were to buy on this MSB, your risk reward changes. Because the target of this is a new high. It goes from a high to a low to a higher high to a higher low. The target is a higher high. So it would be less than 1 hour if you just bought the first time. You can buy the first time if you want. But if you always wait for double confirmation, you may not always get entries. But when you do get entries, they will have higher risk reward. They won't always win, but they don't need to win as often because you're getting higher RR. So if you always buy, and this is exactly how you should test it. If I always buy the first confirmation, the MSB, so just rule A. If I just buy using rule A, I would get 0.98 R, right? 0.93 R. If I wait for rule B, obviously you don't know exactly what that'll be every time, but I get 2R plus. This system needs to be right 70 or 80% of the time to offset fees and to make it profitable. This system needs to be right 50% and it's perfect. Even 40%, 45%, it's still profitable. This system needs to be right less than this system. So by waiting, yes, you may miss trades. Yes, more of the trades will probably lose, but when they win, you make more money. And that's how you have higher expected value. Win rate doesn't matter. Risk reward doesn't matter. The combination of them does. You can't just look at I want high R, or you can't just look at I want high win rate. It's the interplay between the two. And that's expected value, which every blue belt knows. So you wait for the second retest. Very simple. You just set the order at the 4-hour order block. You put your stop loss below the structure, right, market structure level, and then you target new highs. And of course, you can do many other things. You can try and go to a third triple confirmation to get an even tighter entry, so you're somehow able to get in there or get in below this one or whatever. Test things. But initially, you should start with a simple system. If it's a double confirmation with 2 rules, start with that. If you want to go deeper into how could I get a triple confirmation with an even tighter entry and a better risk reward, you can do that, but don't jump the gun. Don't go straight to that. Start first of all with the simplest, cleanest set of rules, as few as possible. Do a full set of testing on that. If it's positive, take it live. While it's live, feel free to go and test 10 other variations, but take the simple thing and get it fucking going. Invalidation below the primary market structure, i.e. the daily, initial target would be new highs. Done. That is the BTFD setup. Establish a primary trend, enter on the secondary trend, wait for confirmation into the primary structure retest. Next one, this is kind of a reversal. Well, it is a reversal signal. And by the way, as I say every single time, this exact same logic applies to downtrends. You just do the opposite direction. You're waiting for a bearish market structure break, not a bullish one. You're waiting for a bearish retest with a lower high, not a higher low, to short or to sell. Next, you've probably seen this many, many, many times if you've been trading market structure. So you get market structure, you have market structure levels, but then it doesn't break on a close basis. That's what this meant to represent. It closes here, but it does sweep the market structure level. And I get questions all the time. It's like, Michael, what do you do if its candle closes, but it has wicks below it? Does that count as a break? First answer, yes, it can. If you always use wicks as your market structure and you're consistent with it, then that would be a break. If you're using candle closes as your market structure, then this is the best way to approach it. And that's through the logic of final grab. So a weakening trend, one of the signs of a weakening trend is that it will pull back further and have to seek liquidity beyond the market structure level before the final attempt at continuation. So that means the primary structure will break with wicks, not with candle closes. Because if it breaks with candle closes, that's just a market structure break. Which is, again, completely valid to then do a reversal trade or exit your trades or short or whatever. But if you're looking at it where the candle close structure does not break, but there are wicks below or above that previous structure level, that can be a sign that the market is losing momentum and it has to grab the stops of people beyond market structure before reversing. Because how would traders approach this? If you're trading here, you're long and it breaks out again. You're long, you move your stop to there and it breaks out again. You're long and you move your stop to there. So if you're in the same trade, right? If you're in the same exact trade and your invalidation is here and then it breaks up, you move your invalidation to here once it breaks up there. Once it breaks up here, see this one? Once it breaks out there, you move your invalidation up to here. And that's what people will do. And the market comes back, price comes back, and it takes those stops, it grabs that liquidity, and it reverses. So this is if you've ever been in a situation where it looks like an uptrend, it feels like an uptrend, it still is an uptrend, and you're still long and you're still bullish, and you move